You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody, that music means it is Education Wednesday once again here on the old Options Insider Radio Network. Time once again for Options Bootcamp, the premier options educational program out there. For all of you out there, the growing army of retail options traders, many of you discovering options for the first time over the last year and a half, many of you in the last 3 to 6 months. So welcome to all you newcomers out there. Come on in. The water's fine. It's a little choppy. Could be a little spooky. We'll be your lifeguards here on the show. We'll help you. So you make sure you don't dive into the deep end before you're ready. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever exciting Options Insider Radio Network. I remind all of you newcomers, there are a number of ways for you folks to engage with the content. Of course, the way many of you are doing it right now, on demand, on your platform of choice. There are literally more of those popping off every day. I thought we were topped out on podcast platforms, but I was a fool because there are more hitting us up literally every day trying to launch new podcast platforms or podcast communities or aggregators, you name it. I'm sure if I check my email right now, there's probably at least 2 in there that are hitting us up for the content. So there's no shortage of places you guys can get it on demand. Glad to see so many of you are enjoying, including a lot of you hitting us up and enjoying it on YouTube, which again, if you like that, have at it. It's not our primary destination out there, but a lot of you like to use YouTube to listen anyway. So it's a great use case. It puts a nice static image up there and you could have it open on a tab while you're doing something else and listening to some great OBC over there. Of course, if you want to go above and beyond, listen live, engage with all of our hosts, not just with Dan and myself here, but all the other hosts we have on all the different shows throughout the week. Then the optioninsider.com/plus is the place to go to get access to the live. And then, of course, you want to go above and beyond that. You want to engage. You want to ask questions to all of the leading minds in the world of options and derivatives, as well as great unusual activity content as well. The optionsinsider.com/pro is the place to go to get all of that. And, of course, however you listen live after the fact, keep hitting us up. Those questions, those comments, they really are the lifeblood of this program because they help us get to know exactly what you folks are curious about, where you're having problems, where you're seeing some issues out there so we can help you work through them. And I keep saying we. Who's joining me on this show? Well, none other than the black-hatted one himself, Mr. Dan Passarelli from Market Taker Mentoring, also the author of 1 or 2 or 47 options-oriented tomes. Mr. P, welcome back to the program, and why don't you list all of your 47 books for our listeners right now, sir. Go.
Good to be here. And, well, you're just going to have to look me up on Amazon. It might be slightly less than 47, but yeah. So, yeah, just going to have to look it up on Amazon.
All right, 46. I may have been prone to exaggeration there. 46 is the actual answer. Look it up. 2 S's, 2 L's, and an I in there, maybe an R or 2, a P, throw them all in there. You can find them on the old Amazonians. And Mr. Dan, I know you've been busy over there in the land of MTM. I know it's only been about a week since you launched it, but how goes the options rating, sir?
Oh, yes. Options Rater, which is our short squeeze finder, is going really, really great. Got a lot of people using it. I've done some webinars on it to sort of introduce it, and it's. I'll tell you what, it's really fun to trade. First of all, it's just one of those where the ones that hit, like you can have some really, really nice leveraged wins, and it's fun when you have those. And the losers, we use some stops, we keep them small, and it's honestly it's just fun to trade.
This whole meme corner thing started as kind of a joke, but now that you're doing this options rating, maybe we need to codify this into a special segment. Meme corner, meme stock of the week, brought to you by Options Rater. What do you think?
Yeah, there you go. Yeah. Let's do it.
So what are some of the hot names you've been rating lately, sir?
Oh, well, let's see. I mean, AMC always comes up, but that one I do not think is really primed for a breakout. You know which one was a really nice one? Was QS. That one, I think it's been about a week and a half. That one had some signals, and there was like a nice pop, and it gave you yet another chance to get in. And it was one of the smaller moves, but it could have worked out really, really nicely as well. What did we talk about on the last show? We talked about, I told the story about GRE on the last show.
Go Wireless too. Go Wireless.
Oh, yeah. That was the day that our students first got access to this. Go Wireless popped up, and that was the stock was up 40% that day. That was like, holy moly.
Well, I always say holy moly when I check out the listener questions. You guys have a ton of them, so let's see if we can help you out. A little bit of the old mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, everybody. Welcome to the mail call, the portion of the show where we turn the spotlight on you folks and see what's troubling you. What are the questions? Last week, you guys were all up in arms about some interesting headlines around some illicit wash sale, using those wash sales to game fee arb. There's always something weird, something crazy out there in the headlines of the world of options. Maybe those are confusing you. Maybe you just have a question about a strategy or things like that. We're here to take on all comers here and help you folks navigate these crazy, crazy waters. And Mr. Dan, before we get started, I know you're kind of busy raiding over there, but when you're not busy raiding, I can just picture Dan with the pirate hat, cutlass in his teeth, just diving off the side of the pirate ship. But I digress. Conjuring mental images for days here. When you're not busy raiding, Mr. Dan, I know folks are coming to you asking questions. In fact, I do believe you have your mastermind series coming up pretty soon. So what are some of the questions that are top of mind? What are some of the masterminds asking you, sir?
I did get this question, a direct message in our chat room the other day, and it was that I forget exactly the phrasing, but it said, I was told not to buy or not to trade options on stocks less than $20. Why not? And he was told that probably by me, because that is definitely one of that's one of my maybe caveats, maybe warnings. It's not necessarily a hard, fast rule, but they certainly do trade a little bit differently. And I think you have to be a little bit careful. One of the reasons for that is because because options trade effectively as a percentage of the stock price. If it's a $10 stock, the options are going to be like a nickel, a dime, 15 cents, maybe 20 cents, but that would be 20% of the options value. Obviously the in the monies can be worth more, but we really care about what the time value is. And so they can be a little bit trickier. When you're dealing with options that are like a dime bid at 15 cents, like you have to consider that the offer is like 50% higher than the bid. And yes, that's only a dime, but it just makes it a little bit more challenging, and I won't rule it out. I definitely trade some options on stocks that are under $20, but I'm a little bit more cautious, a little bit more reserved, and my strategy is just a little bit different.
Yeah, that is kind of an old school maxim. A lot of the old timers that have been on our network, and I say old timers with love. I remember the Viceroy, Alex Jacobson, who was a stalwart on our option block for many years over there, a great options educator in his own right. He would not even touch. If he talked about an option below $10, Dan, he wouldn't even look at it. He just a completely anathema to him. So there certainly is a school of thought that still looks at that and says, if the stock's $5, the stock is an option. You don't need the options. But there are other schools of thought that say, hey, if you do things judiciously, if you're buying an option for $1.50 on a stock that's worth $5 already and the option expires in like a month or two, yeah, maybe then you probably need to rethink what you're doing out there. But there are other use cases that fall into interesting. It could be a whole show as well on, option strategies, do's and don'ts for options on stocks, let's say below $10. It's intriguing. Maybe you're giving me some ideas here, Mr. Dan. Let's see what ideas the listeners have in store for us. First off, we have Ed Kowalczyk. Hopefully I didn't butcher that, Ed. He says, what would you say is the most misunderstood options strat? Thanks for all you guys do. Wow. Oh, there's a lot that could fall into this category. We had our big question of the week last week on straddles. Do you guys like them or not? And more people liked them than I expected coming into that trade, or into that poll, I should say. So I think you might certainly be able to lump straddles into that for a variety of reasons. When we first started this network, 14 odd years, almost 15 years ago, a lot of people were getting deluged with infomercials hitting them up late at night about, hey, use options to make money in any market condition. That was the selling point. And they were all talking about straddle. They didn't say that. That was kind of behind the scenes what they were doing. And people were losing money hand over fist because buying long straddles over and over again, it's a difficult trade for professionals who have the ability to gamma scalp and trade around that. For retail who don't really have that ability, they need the stock to just pop aggressively in one direction or the other. It's an extremely hard trade to make work. But fast forward to 2021, where we're in a little bit more choppy, more turbulent period. We have meme stocks exploding all over the place. Suddenly, long straddles are looked at in a little bit of a different lens. In fact, Mr. P, he loves himself a little bit of the long straddles out there when he's not busy rating. And sometimes when he is rating, maybe he's using straddles to do so. So I may have to put my vote for the much maligned straddle. Mr. Dan, do you agree, or do you have an alternate strategy you think is the most misunderstood?
Man, this would be a good one for one-year polls, man. Straddles are definitely a great candidate for that. I'm going to throw into the ring also time spreads.
Oh, yeah, that's a great one. That might be the winner, just right there. Yes.
Yeah. I mean, I think a lot of people really oversimplify them. And in a lot of ways, they are simple, but there's just certain nuances to it that become a lot more important than just looking at the P&L diagram and saying, oh, there's the break even, there's the break even. I got to stay between these 2 points. Like if you want to get really good at them and make money in the long run, there's a couple other things that you need to add into there, like term structure volatility, and sort of model that out and only play it when when you can sell the higher volatility than what you're buying. Maybe a couple other little nuances. So yeah, I'm putting that one in there for a candidate for sure.
That might be a good idea for a question of the week next week. I've got straddles and time spreads. What else should we add in there to make it our 4 questions? Our 4 butterflies? Think they should be in there?
Yeah, I mean, there's definitely some nuances in butterflies that I think people could benefit from.
I mean, an easy one people probably won't guess, maybe like vertical, something like that. I don't know. There's an art to putting together these surveys, but that we may borrow that for next week, Mr. Dan. We may use that for our actually, I shouldn't say borrow from Dan. I should borrow it from Ed. Ed Kowalczyk suggested a good suggestion there, Ed. So yeah, those are our answers. I like the much maligned straddle, but I think in terms of, where people really just run into roadblocks, it's got to be the time spread. That's a 201 or 301 concept that I've said many times. But you know what? We will put this out to you as well, I think, and see what you folks have to say in our question of the week, maybe next week. So producers, take note. That would be a good one for next week. All right, let's keep on rolling. Da Barista. I'm guessing he's either a Starbucks aficionado, perhaps a Starbucks employee. Who knows? But Da Barista says, any pro tips or cautionary tales for trading options on metal ETFs like GLD and SLV. Well, yeah, this again, we don't get into commodities too often on this show. A lot of the vectors you folks use to trade those are these products. GLD and SLV are very popular. We recommend them here on this show for if you want to trade and get exposure to the metals, as opposed if you're too intimidated to use the futures options. Because the nice thing about GLD and SLV is they hold the physical. So unlike a lot of the other ETFs out there that try to approximate some sort of basket of futures holdings, what inevitably ends up happening is they suffer from erosion as the futures roll down that contango curve. None of that makes sense to you. Check out our archives, check out shows like This Week in Futures Options and others that'll help explain that a little bit more to you. But a lot of these products, they're not that great for buying and holding, which is a use case a lot of you like to use. GLD and SLV don't have that problem, so it makes them much more attractive from that perspective. And also, as Barista points out, they have a pretty decent options market around them too, so they're pretty liquid from that perspective. In terms of pro tips or cautionary tales, the one cautionary tale I would have, and this pertains to any kind of commodity type product, the metals are also in that category, is that you have to be careful of the skew. If you're coming into trading a GLD and an SLV and you're primarily used to, let's say, trading options on SPY or a Tesla or a meme stock, or pick your equity option of choice, you're predominantly going to see, areas. Well, maybe the meme stock's not so much anymore. They're starting to get bids to the upside as well. So maybe that might make it a little bit more comfortable for you to transition into the metals. But what you usually see in a big index and a lot of your big equities is investment skew, where the calls are offered, the puts are bid from a volatility perspective. And now getting into the metals, it can be very different depending on what's going on in gold and silver. And of course, gold and silver taking it on the chin right now. In fact, I was just looking at some data before the showtime. They settled at a 6-month lows pretty much this past week. So a little bit of downside out there. So you're going to see the bid and that skew swing and move around. In fact, if you want a good example of how skew can change, the metals are a great example. One week the calls could be bid, next week the puts are bid. Typically the bid is to the calls out there, but it can evolve over time. So that's something to be aware of as you're going out there. Maybe you're a traditional covered call trader in, let's say, I don't know, a name like Ford or in the SPY. You're used to generating a certain amount of income. Now you go into GLD and all of a sudden, whoa, man, these calls are super juicy. It's because the skew is bid to the upside. So something to pay attention to. And it can also make certain strategies, like let's say a covered call, maybe more intriguing or more attractive out there. But that's definitely my caveat I would have going into a product like that is pay attention to the skew, because it could very well be very different to what you're used to, and that could impact the option strategies that you utilize and how they perform. Dan, any pro tips or cautionary tales for trading options on metal ETFs like GLD and SLV?
You touched on some really important points there, Mark. And some of them I'm going to echo and maybe just expound upon a little bit. Those like ETFs seem like just so simple. Hey, you think it's going to go up, you should get long deltas in there, easy peasy, right? But like when Mark was talking about contango and all that, there are some ETFs where you can really get yourself in trouble. There are some that literally blew up just because of how they were structured. They had some crazy moves. And I mean, I would argue that a year so ago, that was the cause of some big trouble in USO, although I think some people disagree with me. But yeah, so there are some advantages to these ones like GLD that hold the physical commodity, because like that one risk is gone. I suspect that there are some carry in there because of that, because they have to hold the gold. So and I don't want to go too much further in that, because it's something that I wouldn't call myself necessarily an expert in the exact structure of every ETF out there. One other thing I'll throw out there is if you look at like a chart of, say, GLD, and I think this is also valid for SLV as well, they're fairly choppy charts. Like you get pretty big gaps overnight in them, which is just sort of like there's just sort of a different feel to that style of trade, which is not good or bad or right or wrong or anything, but it's just sort of another thing to get used to. That said, they probably are a little bit easier and more accessible than trading futures on them. So, Yeah. It certainly is a great choice to have available out there to any trader.
It's funny, Dan, as I was breaking that down, I realized for a lot of our newer listeners who are only trading options on the meme stocks, they may be very used to upside call skew getting bid, which it sounds so crazy to say that out loud, Dan, because that was such a rarity. But now it's just everywhere, as you're seeing with your options raiders.
Yeah, right.
So they may be right at home buying calls on a GLD when the options are bid, because that's what they're used to. So a very different scenario than, let's say, a year ago if someone had asked me that question. Intriguing stuff. All right, let's keep on rolling here. Let's go to Alan. Alan wants to know, what was the biggest volatility surprise you guys have had during this whole pandemic period? Well, I went first on the GLD SLV. So, Mr. Dan, I will give you pride of place. Pandemic period, that goes back to pretty much February and March of last year. That's quite the long time frame there, over a year and a half now. Mr. Dan, over that time, what would you say is the biggest volatility surprise that you noticed?
Oh man, it would surely have to be one of the earnings trades that we traded using our total earnings domination system last quarter, Q2 earnings season. It was the most, just from the stocks that I personally observed, I don't necessarily have data on this, but just the ones that I traded, there were bigger moves than there have been in the last couple of years. And I know that because part of what we do is we look at literally the overnight gaps every quarter from the past couple of years. And there were several of the stocks that I put on trades in, and so did our students, that where the gap was like the biggest it's been in 8 quarters. So yeah, I don't have an exact specific surprise, but there was a whole bunch of them in Q2, and I wonder if it's going to be that way this time around, just with the VIX and the NASDAQ vol pretty up, and there is some guidance being announced. Some companies higher, some companies lower. I guess you always get that, but I'm really looking forward to this earnings season.
Yeah, I think my earnings surprise dovetails with that. And again, speaking of the earnings and what we expect for next season, we just had Matt from Orats, the keeper of all of our earnings data, on our Advisors Option show last week. From crunching the numbers, he thinks this next season could be a bit of a banger. He could be one of our first break-even seasons that we've seen pretty much since the pandemic began. And what I mean by that, listeners, is that we track all of the performance on those reports there for all the major names, and how they perform compared to history, and how they perform over time compared to what was being priced in going into the start of the season. I have to say, my biggest surprise since the pandemic began from a vol perspective has been kind of on the flip side of what Dan was talking about, because there have been certainly some outperformers, but in aggregate, they have come for this vol since the start of the pandemic in a way that I don't think anyone, certainly myself, I did not anticipate when this all kicked off. I assumed when we started seeing back in February or March of last year, big names coming out and saying, you know what? We have no idea what the future holds with this pandemic. We're retracting all of our guidance. It's just throwing our hands in the air. We have no idea what the future holds. That would usually be a recipe for massive sell-offs and a huge amount of volatility in these names. And what we saw was actually exactly the opposite. The market just kind of shrugged its shoulders and didn't care. And they came for the vol and they annihilated it in all of these names. And they continued to do so cycle after cycle, season after season, for the better part of the last year and a half. We have not seen a single season that, when you aggregate all the names together, that has broken even. What I mean from that is, if you bought a basket of all the names that we're reporting, for example, if you delivered 100%, that means how much vol was being priced in, that all those names moved exactly that amount. You broke even on your straddles there. We have not seen a single season that has broken even. The best we have seen was actually last season, which came in at 86%, which doesn't sound like a lot. You still lost money, but hey, you lost a heck of a lot less than you did pretty much every other cycle since the pandemic began. We had cycles in the 60-odd%. If you were a vol buyer out there and doing so in large scale, you were getting annihilated cycle after cycle. It was crazy to see. And again, not something that I ever anticipated put all those words together, all those buzzwords, pandemic, revoking of guidance, uncertainty for the future. All these things should translate into more volatility. And what we saw was exactly the opposite. I don't think anyone going into that period who studies the data, crunches the numbers. I know Matt was surprised. He'd been crunching that data for a while. He didn't expect that. So anyone who's been watching this stuff for a while did not expect that. And yet that's exactly what we got. So one of the many reasons why 2020 and now into 2021 have been unprecedented, that to me would have to be the biggest vol surprise out here. Let's go out this one from Curtis. Now that I think about it, it might be a good topic to revisit. If you folks are intrigued in this, maybe kind of do a deeper dive into it than we have time for now, but maybe we can touch on it a little bit now. This comes from Curtis. He says, hey guys, love the show and all the great content on the network. Well, thank you, Curtis. He says, I've been learning about butterflies and trying them out a bit in products like VIX, but I'm having a hard time trading them effectively. It seems like when I get the move I want, like this week's pop in VIX, I think this came in last week, so that could be what he's referring to. Of course, we had one this week as well, so pick your poison. He says, all the legs of my trade increase, so I can't really take off the butterfly for any real profit. Do you guys trade using butterflies? If so, what are some of the things you've noticed to make them more profitable? Because it seems like just waiting for the underlying to close at your short strike doesn't really work. Well, Mr. Dan, this is kind of a frequent topic. People start learning about options. They realize they're kind of expensive just to buy them, so they start getting into verticals. And from there, it's a very logical progression to flies. And then they encounter this kind of issue sometimes where they have a very specific price point they want that underlying to hit. And if it doesn't get there, it can be challenging. So what are your thoughts? A, first off, what are your use cases for flies? Are you a big fly guy? And then B, do you have any tips for Curtis here who wants to maybe improve his fly game, sir?
Oh, Mark, I am Superfly.
How long have you been waiting on that one, sir? Years. You've been waiting years to drop that one.
Maybe I have. Okay, just maybe I have. So there's two things about butterflies. One is just realize it's never going to settle right at your strike price. Like if you trade 100 of them, okay, it might happen once. But it's never going to be right there. And that's never the goal. The goal is that it's within a pretty good range and you make a pretty good profit, right? Like you can structure them for like risk 1 to make 4 sort of scenario. If you risk 1 and you make 2, you're in really great shape. Even though the maximum profit is 4, if you make 2, like you did great. So a little bit of self-guidance there on what's realistic to expect. And the other thing, a lot of people don't look at this, but in my observation, butterflies are best traded when there's less than 10 days until expiration. So 10 calendar days, like a week and a half. So the reason for that is when there's more time until expiration, that like if you put on a butterfly with a month to go, there's 2 problems with that. One is all your Greeks are 0, right? Or basically 0. So what that means is you can't make any money because your theta is near 0. Your vega is near 0. Your delta is near 0. But if there's a big enough move, you can still hit your maximum loss. So and that said, there's just too much time for that to happen. So you want to really get into that sweet spot where you actually do have some positive theta. You actually can possibly make some money and not have a whole month of carrying this position, twiddling your thumbs, waiting and hoping.
All right. Unfortunately, if you're going to be waiting for the next boot camp, you may be twiddling your fingers and waiting and hoping a little bit as well, but we'll try to get it back at you at our normal time next week here on Education Wednesday. But Mr. Dan, before we go, if folks have questions about flies, and again, I think that could be a good topic for a future episode. So let us know if that intrigues you, listeners. You want to do maybe a deeper dive into butterflies, how to trade them. We have touched on them in the past, but it's been a while, and we haven't really done one that reflects the modern meme environment, let's call it. So it could be an interesting time to revisit the flies out there. But Mr. Dan, if folks have questions about all these different things, the volatility, the flies, maybe they want to just go rating for some options, where should they go? What should they do?
Well, you guys are always welcome anytime you'd like to make your way on over to markettaker.com. I love to hear from our listeners. It's really great. You can just go and hit the, the contact us page, or you can go ahead and join and sign up for a free account where we've got some free classes. You can get access to our chat room, and we'd love to hear from you.
There you go. Check them out, Market Taker. Don't forget the second T over there, markettaker.com, to learn more. And, of course, if you want to participate in all of our fun live sessions throughout the week, ask questions to all of our hosts. And, of course, if you want to go above and beyond and get access to the pro Q&As and our Options Oddities show as well, theoptionsinsider.com/pro is the place to go. And we got to get on out of here, but we'll be back throughout the rest of the week for all of our great content, including TWIFO and the Option Block Part 2 on Thursday, Friday, Ball Views, and our pro show, of course, Options Oddities. And then back again next Education Wednesday, another episode of Options Bootcamp. We'll see you then.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.